So good afternoon to everybody joining us at home for another Liverpool MIPIM webinar. I think this is our fourth or fifth in the series. So whether this is your first one or you've been through it all, again, thank you for joining us. Today we've got another great panel, which Stephen will introduce to you in a second. But before we get going, I'm just going to go through some housekeeping. So as per usual, we can't hear or see you. But if you would like to chat to our panelists or ask a question, you can do so via the Q&A function or the chat feature. Both should be available and ready to use. So you can ask our panelists whatever you like throughout the hour. We will be running till 3:30, so there's plenty of opportunity to do so. But if you do need to leave early for any reason, you can find a recording of the webinar, which will be available tomorrow on the Invest Liverpool website. And it'll also go in an email after this. So without further ado, I will pass you over to Stephen, who will introduce our panelists for today.
Thanks very much, Stefan, and good afternoon, everybody. For those of you who don't know me, I'm Stephen Cowperthwaite, Principal and Managing Director of Avison Young Liverpool, but also Chair of the Liverpool MIPIM Steering Group. So I'm delighted to introduce the latest in our series of Liverpool MIPIM webinars, and I think we've got a fairly humdinger of a session ahead of us today with a fantastic lineup of speakers. So before we start, a word about Liverpool at MIPIM. We've adopted a collective approach with our partners to discuss key issues that affect the property sector. But I think importantly, it's also to give a voice to the sector to ensure that we are contributing to the local, regional and national discussions about recovery, which is particularly apt today with the Chancellor's latest announcement. It's also about fostering new ways of thinking and collaboration between public and private sectors. Our theme for today, the opportunity for investment, how the investment market has changed, and our quality panel, I think fairly reflects these ambitions that we have as a delegation and as a partnership. So without any further words from myself, I'm delighted to bring Sam McClary, who is editor of Estates Gazette, to introduce the panel. I'll go off screen and leave them to have a fantastic conversation, I'm sure. So over to you, Sam.
Thanks, Stephen, and hi everyone who is logged on. Thank you so much for joining us today for what is going to be a very interesting conversation. Before we get into that, though, I am going to allow our panelists to introduce themselves. And what I always like to do with a little introduction is just, the old blind date, who you are, where you come from, and then just what you're hoping to bring to the conversation today. And I'm going to start, Shannon, with you. Don't forget to unmute.
I think I'm unmuted. Hello everybody, my name is Shannon Conway. I work for Glenbrook Property. We're developers. My role there is residential director. For me, my speciality obviously is residential. We work with an awful lot of institutional funds and housing associations, and it's really just to discuss Liverpool as an investment prospect, why I believe there's plenty of room there for growth, why COVID is maybe a catalyst and can bring Liverpool forward through COVID. So that's me.
Brilliant, thanks Shannon. Gavin, I'm going to pass next to you.
Hi Sam, and hi to everyone attending. I'm Gavin Winbanks. I'm Director for Capital Investment and Entrepreneurship at the Department for International Trade. You might remember me from some of my earlier performances at MIPIM. So I head up the UK Government Pavilion and at the moment doing a significant amount of work on the development of a new investment strategy. And so I'm delighted to be able to have the opportunity to speak with the panel today, but also engage with people in Liverpool, particularly because levelling up and the regional economies are going to be absolutely critical to the success of what we're trying to achieve in terms of the investment strategy. So thanks for the invitation today.
Great. Thanks, Gavin. Mark, over to you.
Thanks, Sam. Good afternoon, everybody. I'm Mark Bousfield. I'm the Director of Commercial Development and Investment for the Liverpool City Region Combined Authority. So I have the privilege of investing the public money we receive from government into economic development, be it housing, skills, infrastructure, land and property, anything else. I will offer you a couple of insights into how we think the economy is running and what our opportunities are, into our priorities from a public investment point of view. And of course, as usual, I'll be listening. Thank you.
Thanks, Mark. And last but by no means least, Matt.
Thanks, Sam. Good afternoon. Yeah, my name's Matt Oakley. I work in the commercial property research team at Savills and spend almost my entire life working with investors and businesses, helping them to decide where in the UK they should locate and invest. So I'm hoping to end this call with a lot more persuasive reasons for them to put their money into Liverpool going forward.
Fantastic. Thank you, everyone. And let's start with maybe a bit around that persuasiveness. So the title of today's event is The Opportunities for Investment, How the Market Has Changed. And I think it's fair to say that a lot has changed over the last 6 months or so. So I thought it would be quite fun if we flip the conversation a little bit to start off with and say, why aren't people seizing on the opportunities to invest in Liverpool? What is it? What are the reasons that might be keeping them away? And because he's never shy of being controversial, Matt, I'm gonna ask you first to have a go at answering that.
I think, you know, despite the fact that Liverpudlians are a very proud group of people of being Liverpudlians, I don't think Liverpool has ever shouted loud enough about what it is, what it stands for. It's a weird mix of tremendous confidence in the city and the culture, but actually when you look at it in the cold hard sort of stats I look at, there's never really been a lot of institutional quality property to buy there, so just a lack of stuff to buy. You know, I probably shouldn't mention Manchester on a Liverpool call, but you know, Manchester has never been shy about selling itself hard on the global stage. Yet when I look at comparators between the two cities in terms of things that weirdly matter to branding, you know, having a strong global football team, you know, high presence in media, you know, they should be batting at a similar level, but haven't. So I think, you know, there is a confidence issue. Obviously, there are some things from the past that have been an issue, and it was on a fabulous EG event many years ago that I shared a platform with Derek Hatton, and you know, he was very open. He said, like, you know, the biggest mistake we made was not becoming a greater Liverpool at the same time as Manchester became a greater Manchester. So I think, you know, it's great to see people like Mark leading the city, you know, the city going forward as well, and it really feels like it's coming together and there's some real opportunities going forward.
Mark, do you feel confident? Are you ready to shout and be greater Liverpool?
Yeah, I do. Yeah, yes, I do. I feel supremely confident. I feel supremely confident because I think we know exactly what we're good at now. So even 2-3 years ago, we wouldn't shout from the rooftops that we have a global health institution with a £500 million portfolio, research portfolio from the Bill and Melinda Gates Foundation. But the Liverpool School of Tropical Medicine is there. It employs 700 people. Most of them appear to have a PhD and has a global impact. The high performance computing that we've just rolled out of the University of Liverpool and into a health and social care cooperative product appears to be the blueprint for integrating health and social care data across the country now, as far as I can see from the last 2 months' developments. And we say the same about Unilever. So one of the things that we're working on the public sector side really strongly is the National Packaging Innovation Centre, which is about taking a £1 trillion packaging market and seeing ways to make it sustainable. And within 3 months, we've had 10 FTSE 100 companies, AstraZeneca, Tesco, Unilever, P&G, Mondelez, and a load of international companies saying, if you do it, we'll definitely come. So I think we're much, much better at going straight onto this is what we're good at, this is what we're going to keep being good at, and this is why it matters, footprint. And it's starting to trickle through the numbers, I think.
Fantastic, thank you. Gavin, Matt mentioned there that Liverpool isn't Manchester. Manchester, we know, has been very good at wooing the international investors. From what Mark has just told us, Liverpool should absolutely be wooing international investors too, with the growth opportunities that it has. From your perspective, from the seat that you sit in, are international investors asking the questions about Liverpool? Are you seeing them being wooed? Are they feeling confident in Liverpool as an investment hub?
So thanks, Sam. I think so the work that we do in kind of engaging regionally, so the team kind of sources and identifies projects across the UK. Liverpool is a market where we've always been active. And the counterbalance to that is a team of people in 25 different countries around the world where we kind of source and identify investment. I think probably picking up a couple of points from previous panelists is one is like being kind of laser-like on articulating what the offer is, and also not trying to kind of what is of interest to the institutional investors will be finite, and not necessarily going out with like a package of 10 different opportunities, but actually being really confident in some of the projects that were just mentioned and taking them consistently and having a clear engagement plan on how you're going to do the follow-up and the engagement with the international investors either in their home market and trying to encourage them into the UK. So I think there is an interest. We've had many delegations that have kind of come from abroad into Liverpool. I think one of the things that kind of central government has to do more to support people in Liverpool in doing is making sure that that kind of investor journey is really clear and consistent. And just as the messaging around what we're trying to achieve and how the quality of the offer is kind of the tenacity with which we approach the investor engagement to make sure that we kind of see things through as we generate interest in the international market. So do less things better and be more confident and ambitious in the way in which we chase them.
Fantastic, thank you. And Shannon, for you, what do you see as some of the opportunities in Liverpool and maybe some of the misunderstandings that people have around Liverpool, particularly those investors?
The first thing I'd probably like to say is that in Liverpool, the Keel, which is build-to-rent scheme that we delivered down the waterfront, was actually the first forward-funded PRS or build-to-rent apartment scheme in the whole of the UK. So I think that's one positive, and that was back in 2014 that deal was agreed. And at the time, it was quite difficult to attract institutional funding to that scheme, but the fund that went for it, which was Moorfield, did very, very well when it stabilised and was sold to another investor. So I suppose the risk, if you'd call it, the perceived risk in Liverpool certainly paid off for them. I think one of the things that we've found over the years is when we talk to investors about Liverpool, there's some, by the way, who absolutely love it and see all the potential in there. The ones that shy away will normally always go back to graduate retention or jobs. But as Mark's said today, there are plenty of interesting jobs. There's plenty of graduates who are living and working in Liverpool. But we forget about the whole M62 corridor and also Manchester. And I think it's very much, we can't separate Liverpool and Manchester, because when we're talking about living and working, you know, if you've lived in London, you know, to travel across London for an hour or an hour and a half, you know, people do it. It's not out of the ordinary. Well, it's a 45-minute commute from Liverpool to Manchester. So we need to stop separating ourselves. and especially now, I think with COVID and flexible working, and you having the opportunity to live somewhere and travel a couple of times a week, all of a sudden we become more connected and you have more choice of where you want to live. And that's not just Liverpool, that's a lot of places around the UK. We're seeing that trend. So for me, and I think we'll talk later about it, I think Liverpool has always been of interest to some investors. Others have just gone for the perceived safe option, which is your Leeds, well, it's always the same: Leeds, Birmingham, Manchester, Bristol. Because it's perceived safe. And if you're new to the sector, especially during COVID, we're seeing a lot of institutional investors who would traditionally invest in commercial assets, offices, retail, industrial, looking now to residential with no experience whatsoever. We're meeting a lot of them because we've obviously been doing this for a very long time. We've got a track record for delivery. But they are just reading the press or listening to hearsay and thinking Manchester, Leeds, Birmingham, and you almost have to talk them into some of the secondary cities. But at the moment, actually, that it's not so difficult to persuade people. I think that's something that COVID has brought through is a real opportunity for some of the cities that aren't in those 4 traditional regional locations.
I think one of the other things that COVID has brought to us is there's a lot of chat about cities now, isn't there? And a lot of talk around potentially people wanting to move out of cities. You know, will offices survive in cities, or are we all going to move out? I think, you know, we ran a quote yesterday with people talking for London anyway about there being a donut, whether it's I think they meant a ring donut, not a jam donut, so we'll go with the ring donut analogy. But there's a lot that cities still have to offer, isn't there? And there's perhaps more that the regional cities can offer in a post-COVID world, and have an opportunity to leave London behind, dare I say it. But for Liverpool, how is it going to make sure that it seizes on that opportunity, I suppose, and gets the language right around it being a city that people should want to live, work and play in?
To be honest, I would just say go and see it. I think Liverpool is an incredibly beautiful city. There's a lot of talk during all this time about the 15-minute city, and Paris has been used as an example, and it's certainly something when we're looking at locations for our funding clients, we've always looked at sort of walk scores and being close to amenities or transport links. If you went to Liverpool, if we just talk about the city centre for now, but the same is true of the suburbs as well. You know, the sun rises behind the cathedrals, it sets on the Mersey, you've got virtually the whole city centre is pedestrianised, when other city centres are scrambling to find some way to pedestrianise their city centres. Well, the work that Grosvenor did on Liverpool One, creating a huge city park, it's way above other cities. It's already got it all. It's got the cultural aspects, it's got, you know, the Tate, all the museums. It's well connected, you know, on the main line routes, but also internally with the Merseyrail network. It's already got it all, where other cities are trying to become COVID friendly and create this perfect live-work balance and bringing people and residents in the city centre. It's done. The groundwork's done. So I'd say anybody who comes to Liverpool can see that. You know, it just speaks for itself.
Thanks, Shannon. Mark, you were nodding along there.
Of course I was nodding along. It was beautiful. It's beautiful.
It was.
Matt, do you want to go first? And then I've got a couple of bits to add. But
No, you go ahead. No, I was lost in the poetry.
Yeah, quite. I mean, I found myself wandering down towards the Mersey at a certain point. This one's dead easy, right? If you talk to anybody under the age of 35 odd, it's obvious to them that Liverpool is the, if not amongst the most exciting cities in the UK. Prior to COVID, we had the first, the third and the fourth most visited museum outside of London, with things like the International Wind Factory and the kind of the counterculture that Liverpool's always been famous for. This just sells itself to a certain demographic. but perhaps not as well as it could to a demographic of boardroom occupiers above a certain age. And that's a challenge we've all got to take on. But for the people who actually want to live here, it sells itself. And I think it gives an investment opportunity, because as somebody who's been recently looking myself and looking at the numbers, in fact, we have far too few high quality family living opportunities relative to the size of our ever growing, knowledge intensive, highly educated resident base. And that applies both outside the city centre, so opportunities in that northwest corridor around St Helens, South Knowsley, around the Warrington area, that all of that's out of our patch, as well as that really well thought through urban living that the Keel was the first good example of. And I'm not surprised that the Keel was well let and well traded, because it set a quality standard, and there's definitely space for more of that.
Can I pick up on a point? Because I think Shannon absolutely nailed it when she was talking about it, which was, you know, she used the word risk, and you know, at the moment, you know, Liverpool is perceived as being more risky than some of the more established centres. Whether that is rational or not doesn't really matter. And equally, if you can get a better return, as Moorfield did, great, that justifies the risk. I think the challenge for the next 12, 18 months is the UK, and indeed the world, is in a period of maximum risk aversion. And I would say I don't talk to a single private or institutional investor who isn't doing anything other than pivoting away from risk and towards core, safe, boring. And you know, that is what always happens coming out of a recession. And suddenly it's a hell of a lot easier to justify going back to those well-traveled grounds, and whether it's the capital city or the second city, it actually it's going to make Liverpool's selling Liverpool an awful lot harder going forward. So I think it's focusing on, well, okay, investors, what do they want? What do they perceive as low risk? Has Liverpool got it? And I think, you know, from what Mark was saying earlier, it sounds like there's a credible story here, because, you know, Sam, you must have written more editorials on beds, sheds and meds in the last sort of, you know, couple of years than anything else. You know, everyone, that's what they perceive as low risk, maybe a bit of core CPD offices. That's where the money wants to go. And it's going to be a question of, have you got the stock for them to buy? Nothing more than that, I think. But I think we've got to be real that, you know, people are not going to take a risk. And I think it's true when you get back to individual personal decisions. You know, the British population is not footloose like the Americans. They don't up sticks and move house just because of, you know, COVID, you know, move to the other side of the country. So I don't think there's going to be a flood of people moving, though I'm feeling quite bitter about it, because one of my team, the Liverpudlians, just decided he wants to go back to Liverpool. So I was probably a bad week to ask me to promote Liverpool.
Can I come back on that? Because I think we're really getting into it now, and I think you make a great point about labour mobility, right? So I think a lot of national decisions are made with this assumption that people will move. If you put enough infrastructure around London, people will move. And I don't think that's our lived experience in northern cities. People stay because they've got family connections. People stay because they've got a sense of civic belonging. And so it's its own argument for me for levelling up. Like, you are not going to convince people to move en masse south. So provide the infrastructure in the north, because they will be just as productive as anyone else.
It's so true. It's about stopping people leaving, not encouraging people to move. And I've seen so many cities take their eye off that ball and chase that one. You know, Gavin's there with this amazing trophy bit of investment, and, you know, everyone chases after that, and they take their eye off their local businesses and their local communities, and suddenly the city is not as good as it was.
But that in itself, sorry, I'm going to make a slightly political point. That's the argument for devolution, right? That's the argument for regional investment and devolution.
Gavin?
So so I'm trying to avoid as many bear traps as I possibly can. But what I would say is I think it all has to be pushing in the same direction. And I don't think any one of these interventions in isolation is going to kind of fixing devolution or encouraging people to stay locally doesn't get people over their risk aversion. So having a really coherent articulation of the vision for the city, as has been done in some of the documents that have been produced, as well as a local industrial strategy, so people understand the totality of the offer, as well as making sure that it is a great place in which to live and work, are absolutely fundamental. And if they're all pushing in the right direction, you get the right outcome. If one of those falls down, it's suboptimal. And so I think that's something that there is no one policy solution that will fix any of this. It all has to be done in kind of partnership and coordination. So we're kind of, one of the things that kind of has come to mind is like around the Liverpool tropical disease work. We're hearing from a whole heap of institutional investors who are looking into life sciences for the first time in a long time. Are we doing enough to sell that? So are we kind of articulating that? Is the local industrial strategy, I know that there's a reference to health, are we making all of the messages around Liverpool coherent to kind of match up with people's lived experience and the passion that we heard from Shannon, which is clearly a very real experience?
I think that's an issue not just for Liverpool, isn't it? That coherent message from cities, from city regions, probably from the UK as a whole. So, and I guess that's part of the why we still need to persuade people that Liverpool is a great place to invest. And it stuck in my head from you, Matt, saying you've got to be safe and boring, but it seems like Liverpool is anything but boring. So how is it going to really work hard for its current occupants to make them feel that they want to continue to invest in the city and the region too, and to those who are have plenty of money to play with at the moment but don't know where to put it and are very risk averse, as you've said, Matt. Shannon, any thoughts from you poetically?
Yes. So I think in terms of risk, I was quite careful to say perceived risk, because first of all, I suppose during COVID, I mentioned you've got this view that sort of retail office assets are starting to become more risky, and residential is seen as a more safe and boring option. We saw it during the financial crash. It was residential that held the letting side of things, that stayed secure. And during COVID, we've seen that tenant return and rental payment has outperformed any of the other sectors, which is obviously why people are now moving to residential as a more safe and boring option. And we're seeing interest. Our institutional investors now are coming from Scandinavia, from the States, from Germany, all looking into the UK. The other sort of safe and boring thing is they're called the secondary cities, the more regional cities, because they haven't had substantial growth in the build-to-rent sector. So Manchester, for example, 26,000 build-to-rent units, which personally, by the way, I do not think is oversupply. I think we're at a renaissance period with our rental market. If I went to the States in 2015 and it was like being smacked around the face of the fish, or suddenly a light bulb moment of how what we do isn't fit for purpose, our traditional letting system. So I think we're just at the beginning of a renaissance in terms of residential letting, serving the tenants, and giving good quality to them in terms of service and accommodation. So Liverpool is actually a safe bet, because if you compare it to some of the other regional cities, it's so far behind. We're talking about a couple of thousand build to rent apartments, not 26,000. So there's so much further to go. So it's a safer bet for some, and this is what we're hearing from our institutional investors. Now Manchester, so but then you've always got some that'll go Manchester, everyone's going to, I'll just follow them. They must be doing something right. I'll go to Manchester as well. So I do think that it's a safe bet. Picking up on what Mark said about the family housing and having that type of stock, I echo that as well. I think when you look at the Liverpool suburbs and further out than that, the combined authority and the surrounds, we've lacked that. I think the last 5 years we've seen an awful lot more of it coming through, but there's still a shortage. The traditional housing stock is your terrace housing with a backyard, or a 1930s house with a small garden, and yeah, some people will just absolutely love new homes as well. So we have struggled with that, but there has been a lot more supply in the last 5 years. What we're looking at now, again, and this is pushed by our institutional investors and from the housing associations that we work with, is building good quality single family rental units in areas. And something I'm particularly interested in and looking at is larger schemes and sites in the suburbs where we've got maybe 10 acres, and on there we can do some build to rent, really good quality housing. We can do some later living as well, and we can do some affordable housing with our RP clients, and in the middle have like a big green where everyone can come together and you're bringing in community, but it's using getting everybody, different tenures, different ages, and using all the people that we work with to actually create these fantastic communities and places to live in the suburbs. So that's the drive actually from all the people that we work with. That's what they're looking for, and sort of see ourselves as sort of bringing it together and working that way. And that's the type of thing we're looking at doing in the suburbs of all the major cities that we're looking at.
Great, fantastic. I'm just going to want to say to the audience, thank you for submitting questions. Please do keep doing them, and we will turn to some questions in not too short a time. I want to stick at the moment though with the safe bet analogy with Liverpool, and I wonder, you know, Brexit, COVID, I've let it back. The cat out of the bag. COVID isn't the only problem we're having to deal with. Brexit is looming. Is there an argument, Matt, that Liverpool and other regional cities, but Liverpool in particular, is a safer bet than London in a post-Brexit world or UK?
I think if you're looking at the service sector, yes, definitely. You know, I generally probably see that, you know, services, in particular financial services outside London, is probably less exposed to Brexit because it's selling stuff to those of us who live in the UK rather than cross-border stuff that might be affected. So definitely I think that is, obviously there are bits of the country that are more dependent on import and export. There are bits of the country that are dependent more on European grants and loans than others. But equally, you know, product, I'm still firmly of a view that, you know, product is going to need to move into the country. It's going to come in through our ports. Our port capacity has always been pretty poor in the UK. It needs to get better. And, you know, ports lead to warehouses. Warehouses lead to, you know, jobs. Jobs lead to more shops. It's a slightly virtuous circle, but I think, you know, the point about, you know, has the city got the infrastructure to support it is a very important one. But also I think, you know, it does come back to, you know, the industries that maybe, you know, are you strong in industries that are not going to be negatively affected by it, and you know, tech, biomed, all that kind of stuff is seen as relatively immune, might even get a boost because companies are going to have to run trim track testing. So I wouldn't say Liverpool stands out there as more defensive, but just generally I think, you know, the regional cities could well have a better Brexit than London. And that's probably as far as I'm going to go before one of my colleagues in London kills me.
Thanks, Matt. Mark, Matt was talking there about some of the industries that might be a little bit more resilient during Brexit than others, and Liverpool having some of those. Can you talk to us a little bit about sort of some of the innovation that is going on in Liverpool? I know you touched on it a little bit earlier, but if you just dig a little bit deeper into that for us.
Yeah, sure. Look, I give some. Can I just follow up on Matt's answer first? So
You may.
I agree with you, Matt. I think so. I think we are relatively well placed. You know, we have quite a lot of automotive, for example, but the challenges with automotive existed long before Brexit and will persist long after Brexit, and that's about different models and approaches. But we are relatively well placed. So post-Panama export, hitting its business plan in terms of increasing volumes through that port, and then obviously the link to logistics that you made. High performance computing, materials science and materials related innovation, infectious diseases control, three things that we have national and global strengths in. They're going to do just fine, as will the emerging tech industry and the cultural and creative industries once we get past COVID. I would just say though that my concern for Brexit is not to do with property, is less to do with the business ecosystem actually, but is more to do with the skills agenda. Because one way or another, European social funding has funded skills development in the city region for a long time. And there does need to be a permanent and serious replacement to that funding to help our adult population look towards future jobs. And we've got to keep talking about that, because it will become no less important as we try and get beyond the structural implications of COVID recovery, of Brexit recovery. I think you'd agree with that, Matt and Shannon and Gavin.
All nodding. Anyone disagree?
But then just to go on, I'll illustrate it for a sense. You know, so pivoting out of Brexit, one of the things we're doing in St Helens is this glass futures idea. So we're taking the global research and development departments of 4 or 5 glass manufacturers who typically don't collaborate at all. It's not in their DNA to collaborate, and putting them together in a furnace where they can collaborate with shared or divided IP on sustainable glass uses, including vials for virus vaccines, but including also like data cables and fiber and et cetera. And that again is the kind of post-Brexit, deeply collaborative, knowledge-intensive stuff that we're working on really heavily, because it'll drive a globally focused 21st century. That makes sense?
It does. Gavin, anything that you want to add around the Brexit and Liverpool strength?
So I think being able to coherently articulate exactly as Mark just did around what makes Liverpool uniquely different, and how should we be taking that to the global stage, or how should we be kind of trying to reinforce it to ensure that it stays and is nurtured locally in Liverpool. So that example that was just provided was hugely interesting, and I think the perennial challenge is making sure that civil servants like myself back in London are aware of these opportunities, so that it does get the support that it actually needs. The bit that I usually talk to you, Sam, and colleagues about is the work that we do with the large-scale institutional investors. But another part of my team is attracting like VC and high net worth individuals into the UK to support that economic development and to kind of attract and retain the innovation that is in places like Liverpool. One of the hardest parts of my job is actually trying to source and identify those projects so that we can showcase them to the world. But there is so much talent there, and if what we could be doing is kind of supporting companies and ideas and concepts with kind of grant and research funding, as well as sourcing capital to enable those companies to grow, it further adds to the vibrancy of Liverpool.
So does that mean you need more people, I suppose, to come knocking on your door and saying, "Hey, come and look at us, look at what we do"? Back to that sort of showing off part that we started the conversation around.
So I think local industrial strategy is one way of doing it. I've seen the recovery plan, having a really coherent articulation of what the strengths and the capabilities and what local people are prepared to back in order to make sure that it gets the attention. I mean, and the trouble always is that every city in the UK has a strong and compelling story. Playing to your strengths is the absolute key, and making sure that it's really honed and articulated well, so that we can be in supporting it, we can able to kind of take it in a structured and coherent manner to the world. But yeah, I wouldn't be backwards in coming forwards and extolling the virtue of innovation within Liverpool.
Thanks, Mark. You've come off mute. That usually means you've got something to say.
Not at all. I'm listening.
Okay, we have about 20 minutes left, so I'm going to start ploughing through some of the questions, as I want to make sure that everyone gets an opportunity to have their question answered. The first was emailed in to us, so I'm going to read that, and we'll try and answer that one first. So this is from someone who said, "We have just completed yesterday, well done, Innovate UK funding application for £250,000, which relates to a COVID-19 situation. If we survive the initial round, the results will be announced on 29th of November for a project starting on the 1st of January next year. As a micro company, we will need funding to help cash flow for the first quarter of next year. Innovate UK pay quarterly in arrears. We have partners who will need paying monthly. Other partners like Liverpool University and others will be paid directly. As a company with very little in assets, what would you suggest for them? They're open to any sort of funding and they want to use it as a springboard to other research projects." So very real issue there, and hopefully something we can provide a real solution for. Gavin.
So I'm...
Oh, paused. He's going to come back. Mark, do you want to try while Gavin is paused for us?
Yeah, just to say...
he's back, but go for it.
Yeah, start by saying congratulations. That sounds really exciting. Follow up by saying, as a former banker, I'd need more information on your numbers before I'll be able to recommend what you do there. But if you get in touch, we'll try and help. So we have... just through the CA, there's a flexible growth fund of kind of a very flexible debt that we can offer. There's the British Business Bank backed equity investment options around there. We're doing something called the Future Innovation Fund, which is about short sprint, like grants for short sprint innovation that can get going during the COVID bubble. So you've probably got 4, 5, 6 options, but I need more information.
And Sam, if I'm back,
Gavin, you're back. Hurrah!
Fabulous. Sorry about that. I'm on the government Wi-Fi. I would offer exactly the same in that we have a team that kind of talk to individual companies that are seeking further investment. And depending on what stage and scale, if it's not us, there'll be other parts of government that would definitely be interested in. I think kind of the work of Innovate UK and that program is exemplary. And I think most people do not understand necessarily all the cool things that they are supporting and backing, and all of the supporting ecosystem. So I would hope that if there's anything that we could potentially do, I'd be more than happy to kind of take it up offline separately and try and join some of the dots, as Mark has kind of proposed as well.
I think that's a great offer from the pair of you, and I really hope that person asking the question gets in touch. Please do, and Gavin and Mark will be able to help you out, I'm sure. So next up on our questions from our listeners today, this one I'm gonna direct to you first, Shannon, as it is residential. Liverpool has a number of high-profile failed residential schemes. How is this perceived by investors, and what impact is it having on the city?
Yeah, I thought this question may come up at some point. It has had some failed residential schemes, but the structure of those deals is completely different than build to rent, and even build to sell. And when I say build to rent, I mean the building for an institutional fund or a housing association who are managing that. So it's a completely different model. In terms of speaking to investors, if anything, I suppose looking at the positives, really, they're not competition. You know, it's fractional sales where they have completed. It's more difficult to manage, so you don't get the quality because you've got multiple landlords in place. So in terms of that, there's no competition at all. So we just discount that, really. For an investor, what's important to them is delivery, honesty, transparency. Personally, we've done well in Liverpool. We've got another number of things we're looking at. We've got another scheme in planning, but we always, wherever we are, we always have an open book approach. We collaborate with the investor, with the managing agents, with the architects, with everybody involved has got sight of what we're doing. So it's very clean and transparent and honest. So yeah, in answer to the question, it's not dissuading investors. I think what's really positive is those issues have been brought to the fore and they're being dealt with, and they're now being dealt with swiftly. And I think to show that that action has been taken is a really positive story as well. It shows that, you know, the authority means business. So you'll always get, you know, the negative or the sensational news will always get the headlines. It obviously will, but there's so many good news stories there as well. That yeah, it doesn't really affect significantly the investors' sort of view of the city. Once you get opportunity to talk to them, and obviously the people we're talking to aren't put off by it at all. They see it as an opportunity.
Yeah, thank you, Matt. Is that something that you would agree with, talking to investors lots?
Yeah, I honestly don't think it matters at all. You know, schemes fail, and there is, most developers wouldn't develop if they didn't think they were better than the next developer. Otherwise, who'd take the risk? It wasn't that long ago that Manchester had a massive overhang of the wrong sort of residential stock, and yeah, housing developers called it wrong, and will. I think it's, you've got to have the courage to build, and I'm afraid, moving from what's it going to take moving from not a secondary city, because I don't think Liverpool is a secondary city, moving from a secondary investment location to a primary investment location does involve local investors and developers being prepared to take risk. And I often come back to thinking, well, who's the Ask or the Bruntwood or the Allied London who took those big risks on Manchester coming, post the bomb, massive risks, and it came through. But they delivered the kind of stock that people wanted to work and live in. They delivered stuff that was big enough that institutional investors wanted to buy them. And without that local courage, because it always, I think, does come from the local community, you're not going to move, the city isn't going to move up a division. And some will fail, that's inherently part of risk. If property development didn't involve failure, then everyone would do it.
And we don't get better if we don't fail. You can't learn if you get it right the whole time. Moving on to another question, and Mark, I'm going to direct this one to you to start with. So this is, does the panel consider that the wider city region understands what investors are looking for, i.e. specific investment product, a plan and a timescale? Most investors have a sophisticated set of hurdles for any investment location or criteria. Can the region satisfy these hurdles going forward?
Thank you. I was hoping you were going to ask me the public transport question, because I know how to answer that.
I'll ask you that one as well, don't worry.
I'm not sure what our questioner means by the wider city region. You see, who does our questioner mean?
I do not know. Maybe, well, let's just take it as the city or city and surrounding areas, maybe, but just take it from the city for now.
Okay.
If you can.
Find that one difficult to, I find that one difficult to answer. Look, there's definitely something about pace in the city region and not enough projects coming forward quickly enough. I think we concede that. There's something about clarity over where we're going to build in the city and what for, but I think Tony Reeves has been brilliant in identifying those areas around, like the Knowledge Quarter, the partnership with Scientech, which is Bruntwood LNG, and the aspirations for the Hill and the Knowledge Quarter, which feature heavily in our recovery plans and our CSR submission. And without further specifics, I'd rather just answer the transport question.
Okay, we'll come back to the transport.
I'll just make a point. Sorry, on that,
Matt,
if I may. But just I think I think I would say the city is capable of answering those questions better, in my opinion, than it ever has been before. It may not be perfect, but it's definitely answering these questions better than it ever has done before. And that's a massive step forward from when I started in the 80s and 90s.
Thanks, Matt.
So, Sam, I'll kind of make a, this is not directed exclusively at Liverpool, so just kind of a generic statement. But the work of my team on the project side of it, in engaging with kind of local project promoters around the UK, one of the biggest challenges that they've got is kind of political imperative to be engaging and kind of driving growth and development, while also having a credible pipeline of opportunities. And I think a significant proportion of the time that we spend as a team is actually kind of really testing the proposition as to whether or not something is ready for investment. And I think that kind of clearly honed list of opportunities that people in the city and the wider region are prepared to back and promote internationally and make sure that that actually happens to deliver is absolutely fundamental, as opposed to kind of here is a wish list of things that we might want to do. I think to be compelling in an international context, whether or not it's at a MIPIM or whether or not it's on a one-to-one engagement with investors, is about kind of really knowing at what stage a particular project is and being able to commit to it and give the investor the confidence that if the virtual checkbook is ready to be signed, that there is a project that will actually be that is ready to roll off the back of it. And I think accepting the point that Matt made, I think there is sometimes a disconnect between opportunity and reality, and I think making sure more projects are kind of are being promoted that are ready for investment in those conversations with institutional investors makes it a lot more compelling and a lot more likelihood that those discussions will progress.
Thanks, Gavin. Mark, I've got a great question for you. It's about public transport. Here it comes. Liverpool lacks the public transport that London and Manchester possess, even though we set the standards in the past, says Alan. And parking is expensive. Does the panel believe that these are credible criticism holding back investment? And if so, how do we correct it?
Thanks very much for the question. Liverpool has the most popular commuter train network in the country and the most popular, or the top 3 most popular bus network in the country. So Liverpool's transport problems are not universal. So if you're here already, you'll perceive a really good public transport system. The challenge we have is that to get to Manchester is unacceptably difficult, and to get to London is unacceptably infrequent. But once you're here, the transport system is actually very good. And I think that there's a nuance to that problem that directs solutions in different ways. So in a year or maybe year and a half's time, we get 2 trains an hour from London, and not before time, because the Liverpool to London route, so the London to Liverpool route, is busier than London to Leeds route. So I do perceive and agree with that problem.
Oh, mute. Accidentally muted yourself. There you go.
But not on the local level. And I'd like to take Matt's perspective, actually, whether that rings true in the discussions you have. Like we do see it as a barrier to investment from London out, but we don't see it as a barrier to investment locally or overall, I think.
I used to think good connections to London was really, really important. I'm not that convinced, actually. When I look at other cities, you know, that there is this sort of, let's put the scheme as close as possible to the station that connects to London, because it'll be visible. And it's a bit like saying I need to have my office near Heathrow, and you question the company on how many of their staff travel regularly, and they go, well, it's just the board. You go, well, do you really need that? It is all about local for me. And I also, maybe I'm wrong, but if the new normal remains the new normal, the last 6 months have told us one thing about public transport, is that people hate commuting. So spending vast amounts of money on improving commuting infrastructure could well be a big mistake.
Shannon, any thoughts from you around the public transport in Liverpool?
I've lived in most major cities throughout England, Scotland particularly, and lived in Liverpool for well over 10 years, and I found it and still find it a really commutable city in terms of the Merseyrail network, in terms of the bus network. Cycling, I would say, if you're not cycling along the waterfront, I think it could be a little bit hairy. So I think that would be something interesting to look at. When we're, as I say, we're looking now, or our funds are looking more towards suburban, green, single family rental locations, and cycle routes are definitely up there. It's the first thing we look at. I look at two things when looking at suburban now. It's cycle routes and green space. Even if it sounds really morbid, even if it's a cemetery, you know, I'll class that as, you know, somewhere to go and walk and, you know, just take a break from a city. So for me, and investors that we speak to, Liverpool is seen as locally a good city for getting around. And I would just agree to get that connection. I think I think there's one or two trains from Victoria into Manchester, which you can get to Manchester in 38 minutes. I'd like to see a lot more of them. They're absolutely packed. People are standing in the toilets before it gets to the next stop. I think that definitely needs to be looked at as we talk about the Northwest region and people choosing where they live and moving around the region. And yeah, the connection to London, but I think as Zoom has arrived, I think Avanti have probably got their head in their hands.
I think it'll be interesting as well, won't it, going forward in a post-COVID and in a climate-focused world, whether cycle infrastructure and waterway infrastructure becomes a bit more of a appeal to investors than perhaps road infrastructure and rail infrastructure, and probably a bit of a long way off yet. But as a cyclist, I can but dream. We have 2 minutes left. We might go over by 1 minute. They might let me. And there is one question from the audience left, and then I would like us to finish up on a final question to you all as well. So last question from the audience is that World Heritage status is a particular marker for Liverpool, yet has been put into question by some doubtful developments. How can growth and heritage be harmonised for optimum benefit? Sorry, that's a hard sentence to read. Matt, any thoughts from you?
Well, if anyone's got the answer to it, pretty much every city on the planet is asking the same question. So I think I would say, you know, view what you're building now as the city's future heritage, and you're probably starting from the right place. It's a bit trite, but you know, some people hate new buildings, some people hate old buildings. It's never going to be satisfied. But you know, the city has a great heritage. I mean, beyond the built environment, the city has an amazing heritage, and you know, that is part of the sales package. But I suspect the questioner was asking about the built environment, and they probably don't like new buildings. You know, but look, you know, that, you know, today's new build is tomorrow's heritage, we hope.
Thank you. Mark, any thoughts?
Nothing more sage than what Matt offered.
Fantastic. Okay, so we're dead on 3:30 now. So I just want to take us back to the title of today's session, actually, and just for a last question or thought from all of you, I suppose, on how you think Liverpool should, could, and will sort of seize on promoting the opportunities that there are for investment in it. And I'm going to start with you, Shannon.
So again, I mean, this is from a residential perspective. I think that there's already an awful lot of interest, and I think the past 6 months just generated even more interest in the city. And I think it's just about harnessing that interest now and really promoting what Liverpool can offer. Getting people on a train and up to Liverpool. I think, you know, you don't need to do anything else, but it's really showing that live and work. It's the opposite of the donut, I would say, donut effect that we're seeing in London, because it genuinely is the centre and surrounds. It's a 15-minute city, and I think it's about getting that message across. It's a great place to live, and there's opportunities there to work or use it as a base to work, you know, in other parts of the UK.
Fantastic, thank you. Gavin?
I think we need to bottle the enthusiasm we've heard on the call and alongside the vision that has been clearly articulated as part of the recovery plan and other pieces of work, and just make sure that we're amplifying that to the world, because there's so many positives that have been articulated today. We'd love to support you on doing that from a central government perspective. So the energy and the enthusiasm, we need to amplify it.
Fantastic, thanks, Gavin. Matt?
I think clarity on what the city is great at and what it wants to be great at is really important. I think Gavin made a great point earlier, saying that don't try to be everything for everyone. And I think, you know, it's definitely feels like it's moving in the right way. And then I think, you know, the city's got, you know, the city and its community and its businesses has got to be bold. And I guess I would say this, it's got to build. Because if you don't build stuff for people to buy, they won't come and buy it.
Thanks, Matt. Mark, last but by no means least.
Thank you. Focusing on our strengths, which in our case means starting with our people.
Excellent. Thank you. So some really good takeaways there. So bottle the enthusiasm that we've had in this conversation today, and really turn up the volume on that. Be clear on what you want. Be bold, build, and focus on the people as well. And then I think there is a name for the opposite of the donut, isn't there? I think you can buy like the donut holes, which are delicious, and Liverpool is delicious too. So let's all end there with a sweet tooth and probably now a little bit hungry. But thank you so much, everyone, for joining us today, and huge thanks to Shannon, Mark, Matt, and Gavin.
Thanks, Sam.
Thanks, everyone.
Thank you.